Hello everyone, welcome back to Stock Market Meridian. Today is 17th August 2026 and you're watching today's post-market report. Today, the Indian markets witnessed a high volatility session. The market opened around the previous day's closing level, but from the opening until the middle of the session, we saw strong bearish momentum. However, from around 11:30 am onwards, markets started recovering from the day's lows. Despite the recovery, the markets finally managed to close in the negative zone. Now, let's look at the sectoral performance. Today's top gainers were the realty and metal sectors. On the other hand, the IT and FMCG sectors were the top losers. Coming to individual stocks, today's top gainers were Hindalco, Tata Steel, HDFC Life, ONGC and Axis Bank. And the top losers were HCL Tech, Infosys, Sun Pharma, TCS and Nestle India. Now, let's quickly dive into today's top news and updates. The Iranian Foreign Ministry has stated that direct talks with the United States have not yet begun. Iran has accused Washington of violating the ceasefire understandings, saying that this has made the previously discussed 60-day timeline irrelevant. Tehran also clarified that the Islamabad MOU signed with the US in June does not contain a strict 60-day expiry deadline. Meanwhile, regional mediation is still active. Iran confirmed that intensive talks with Oman are continuing, particularly over shipping routes and maritime transit through the Strait of Hormuz. With Hormuz being a critical route for global crude oil shipments, the lack of a formal US-Iran breakthrough continues to keep energy markets on edge. Moving on to the banking sector. Finance Minister Nirmala Sitharaman has announced that the government will soon reveal the composition of a high-level committee on banking for Viksit Bharat. The committee, proposed in the Union Budget 2026-27, will examine the strategic role of Indian banks in helping India achieve its developed nation goal by 2047. The government is expected to form the committee this month itself. The Finance Minister also highlighted that Indian banks are currently in a strong financial position, with NPAs at multi-year historic lows. Public sector banks reported an aggregate net profit of more than 1.98 lakh crore rupees in FY26. With stronger balance sheets and healthy capital levels, banks are now better positioned to support India's upcoming infrastructure and industrial expansion. Next, SEBI chairman has made it clear that market regulations cannot be designed solely around options trading. SEBI wants to focus more on attracting foreign portfolio investors or FPIs and expanding passive investing, which already accounts for around 30% of the market. SEBI has also confirmed that the closing auction session or CAS is here to stay. Any changes will only be made to address specific operational issues supported by data. At the same time, SEBI is preparing a major revamp of the Securities Lending and Borrowing Mechanism or SLBM. The objective is to increase retail participation and reduce borrowing costs by exploring more transparent online platforms and alternative operating models. A reformed SLBM system could also improve participation in the closing auction session and support better price discovery and arbitrage opportunities. Next, Zee Entertainment Enterprises is back in focus. According to sources reported by CNBC TV18, SEBI is unlikely to challenge the interim relief granted to Zee Entertainment by the Securities Appellate Tribunal or SAT. SEBI is also unlikely to block Zee's planned capital raising process. SAT had allowed Zee to proceed with its preferential issue of fully convertible warrants to promoter entity Sunbright Mauritius Investments. The tribunal also extended the deadline for completing the warrant issue by 1 week. The proposed capital infusion is considered important for the company's financial stability and could benefit minority and retail shareholders. Public shareholders hold approximately 96% of Zee Entertainment's equity, making the successful capital infusion particularly important for broader investor interests. And finally, let's talk about ONGC. ONGC has received a crucial license from the US Treasury's Office of Foreign Assets Control or OFAC, clearing the way for the company to resume full-scale operations in Venezuela. Through ONGC Videsh, the company holds a 40% stake in the San Cristobal oil project and an 11% stake in the Carabobo project. The OFAC approval could allow ONGC to invest more freely in these Venezuelan assets and potentially take operatorship of selected projects. San Cristobal produced around 0.265 million tons of oil equivalent in FY26, which is only a fraction of its potential production capacity. The license could also help ONGC recover more than $500 million in accumulated pending dividends. ONGC is currently in discussions with Venezuelan authorities and its joint venture partners regarding the possible transfer of operatorship from PDVSA to ONGC Videsh. This development could significantly improve ONGC's ability to unlock the value of its Venezuelan assets. Now, let's talk about Hindustan Copper. The stock surged more than 7% intraday, becoming the top gainer on the Nifty 500 index as international copper prices moved close to record highs. Copper prices have gained nearly 16% year-to-date, supported by strong demand and heavy shipments of refined copper into the United States. On the London Metal Exchange, the cash copper contract also showed a significant premium over the 3-month contract, indicating tightness in physical copper supplies. This global copper rally triggered strong buying across domestic metal and mining stocks. Hindustan Copper also reported a massive jump in quarterly net profit, rising to Rs 353 crores compared with Rs 134 crores in the same period last year. The company is targeting 32,000 tons of metal in concentrate production this year, compared with 27,000 tons last year. And notably, the stock has gained more than 134% over the past 12 months, reflecting the strong global rally in base metals. And that's all for today's post-market report. If you found this analysis useful, make sure to like this video, share it with your fellow investors, and subscribe to Stock Market Meridian. I'll be back tomorrow morning with another detailed pre-market report covering global markets, important developments, commodities, and the key factors that could influence the Indian market before the opening bell. Until then, signing off. Jai Hind.